Good morning, it's Brian here. It is the Expert Dojo podcast hour. Again, I am bringing you an incredible entrepreneur who is breaking through around the world. Again, I am giving you first look at a company that we believe is going to become a unicorn in the future. We believe it's got all of the fundamentals to do incredible things and just grow at a phenomenal rate. And we're going to go deep into this. I love it because it's in the fintech space. And actually, as a European living in the US, even though this product is not being launched in the US initially, living in the US, this problem that this company Akiba are solving for me is a huge problem in the US because it's something that has frustrated me for years and years and years. And I'm going to go into that in a little bit more detail. But first, I would like to welcome Tebogo to the show. Welcome.
Thank you. Thank you so much, Brian. Thanks for having me.
This is going to be a great show because we're just going to talk about you. We're going to talk about your journey. We're going to talk about how you started it. We're going to talk about the idea, where it came from. And most importantly, for all of the investors listening, and this was what made me want to invest in you, actually, when we put our investment in. But we're going to talk about the journey, the road to taking it from where you are now all the way to that $100,000 a month in revenue and $1 million a month in revenue and $10 million a month in revenue, where you're ringing a bell somewhere and saying, I made it.
Looking forward to it. Yeah.
Okay, so let's go back to the genesis of the idea. And I'll start with my frustration. And my frustration is the entire credit facilitation within anybody for anything, right? If you're looking to borrow money, even if we're talking about the US, and I know you're looking to launch this in Africa first, but even in the US, the whole way that credit is arranged and monitored and put together is so damn archaic because it relies on data in the past. And any current decision making that relies on previous data, for me, is absolutely absurd because it is such a tiny part of the picture and it doesn't allow for anything that is even current in the business, never mind what's going to be future in the business or where the business is going to go to. So you tackled this problem head on, which I absolutely love. And you said to yourself, how is it possible for banks or any other institutions to be able to give credit without access to in-the-moment data to tell them what's happening within that company or within that individual themselves? Can you talk a little bit about where it came from and not just where you came up with this piece of genius? Because I think a lot of people would look at this and say, duh, yeah, obviously we need to know that. But like, why the heck wasn't this available before? And how did you come up with the AI and the machine learning to actually create such an incredible, not just concept, but actual product?
Let me tell you this, Brian. I actually have a personal story. I remember when I was a first graduate, got a job at one of the biggest investment management firms in South Africa as a software engineer, which is obviously was the hottest thing back then. Well, I'm not that old, but it still is.
You're making me feel old.
And and I remember going to a cell phone shop to try and get my first contract, right? Cell phone contract. And they told me, we don't have any credit record of you. You are what they deem a thin-filed customer. And I remember asking myself, what the heck does that mean? I mean, I just graduated like a few months ago. I got this amazing job. Surely you should be, rushing to give me any deal. And they told me, no, we can't, because this credit scoring thing we use doesn't have any record of you because you've never taken out any credit. And I thought to myself, how was I ever supposed to take out credit when I wasn't working? And now I'm working, I have a salary, and you still can't give me a phone contract.
Crazy.
And for me, that was, absurd. And I thought to myself, so does this mean that these traditional scoring methods are only giving you a score because you've lended before? But isn't it an egg chicken situation when you've never lended before? And over the years, a lot of people kept telling me this. But the worst part is, if you start off your career being an entrepreneur, that means they never have a formal record of your salary, right? And to them, you're deemed an unscorable, part of the unscorable population. Similarly to the 80% so Africans that work in formal jobs that cannot, for the life of themselves, have any formal access to financial products, credit lending products whatsoever, because they're deemed unscorable. these traditional scoring methods just don't have a record of them. They don't care to collect a record of them because they've never had any credit product. And that's where the problem came about. So we started seeing this
It's
recurring.
also, sorry to interrupt, but it's so old fashioned. You
It
know, it
really,
just,
really
it
is.
really, the entire credit system. And this is what, you know, what's wonderful about what I do and getting to invest in incredible new companies, bringing out technology, is some of the times you look at things and you think, how did nobody notice this? Because like the way credit scoring is done today really relates to how families used to be 50 years ago. You know, a
Absolutely.
person, normally the male, would like go and get a job and then stay in that job for 50 years and never move and never do anything else. And as they moved up, they moved from their like 1-bedroom terrace house to their 1.5 bedroom. And then they slowly move and the credit facilities looked at them. But that is a bygone age that actually we never really want to have back again. We have moved
Never.
on
Yeah.
so much. And actually before, I would be like, yeah, maybe this is just entrepreneurs or maybe this is just folks that are coming out of college. But literally, we have moved into the freelance economy whereby every single
Absolutely.
individual, every single business is
Yes.
in the moment profitable or not profitable. And even if
Yeah.
you look at businesses today during COVID, companies that were incredibly profitable 6, 9, 12 months ago are doomed today. And based on those old 1940s credit facilities, banks would be losing their tail. So I think you're a genius. That's all I'm saying is like you have taken something which is so obviously and ridiculously and permanently broken that
Yeah.
cannot be fixed with small fixes and come at it from a new angle. So keep going. I'm excited.
Yeah, no, and yeah, you hit it on the nail there. The other incredible thing is that we look at the gig economy workers in Africa alone. That is a huge market, right? These are the entrepreneurs, single or sole proprietary type businesses, where typically in Africa, a woman is running the business, whether in a small market or on the internet, e-commerce, whatever the platform. But the point is, they are generating revenue. And just because they don't have the so-called traditional collateral, the banks just don't notice them. They don't even bother. Now, the problem becomes the banks themselves realizing that they can't get any new business because none of these new businesses qualify to access credit. And remember, the one job that banks do is to sell money and sell money effectively. So if they're failing to sell money to these businesses, more than, say, I don't know, 30% of the economy, we're talking, they are also losing. So I think they're realizing that they are in this very strange gap, but they themselves don't know how to get out of it because they've been relying solely on these traditional scoring methods to get insights about customers. And now, guess what? The customer has evolved. The customer that has buying power is young, tech savvy, has a mobile phone, is an entrepreneur, gig economy worker, and the banks don't know much about them, right? They're not collecting their spending behaviors. They're not realizing that these people are not even transacting on bank products, i.e., there's mobile money, which is a big thing in Africa. These small merchants are using point of sale devices to collect money from cards that are not even owned by the banks. Things have completely changed. So I think banks are now realizing, not just banks, even the small sort of non-traditional lenders who have tried to obviously use different ways of scoring their customers are also realizing more and more they need other alternative data sets and other views of their customer, not just that partial view that they were getting from the traditional scoring models.
So what did you do? Because look, when I first spoke to you, I got
Mhm.
excited in a way. Sometimes, a lot of the time, we always invest in great entrepreneurs and we try to always invest in incredible companies that are doing good things. But sometimes I get a company where I think, ooh, this is very exciting because
Mhm.
it can ticks all of those wonderful frictionless innovation boxes where
Yeah.
every single stakeholder in the chain should want this to happen. The businesses want this to happen because they want to be able to get the credit that they need to grow the business at the rate that they want to grow the business. The banks want to get it because I love your point. It's so simple. A bank only has one job, and that is to sell money effectively. I love how you phrase that. And all of the stakeholders that sit inside that entire ecosystem all want this to be done properly so that more money can be circulated into the system, which creates more money, which creates more business, which creates more profit, which continues the circular economy. So you obviously isolated this huge problem, which I saw when we first spoke with you. How did you come up with a solution?
Yeah. So we looked at, the environment and I mean, myself being a scientist in every aspect, by the way. So I triple majored biochemistry, genetics, and computer science. So
But
I am
double wasn't good enough for
entrenched.
you, was it not?
No, I mean, I don't know. Perhaps
God, I
there
hate
was.
you overachievers. You're just not going to make me look so bad. Damn.
No, no, but one thing I realized, right? I mean, a triple major doesn't mean anything. I think innately I'm just an observer and I love observing nature. I love observing the environment. And I think there's so much truth in how the environment coexists and everything works so well together. And that for me is how I view data. Everything you do from the day from the moment you wake up in the morning, your alarm going off on recorded by iOS device, to the time you check your inboxes, that's Google monitoring you, to the time you decide to buy something online, you've created a trail of data that you don't see and realize yourself. And that can tell me from a mile away the kind of person you are, right? And for me, it always amazes me that banks don't pay that level of attention. Just from monitoring my behavior from 8 o'clock in the morning to midday when I have lunch, you can tell me exactly what I need in my life if you paid attention. And that's basically what we wanted to do at Akiba. So we built a platform. Right now it's becoming a software as a service type platform that we call Gugu.ai. And it's a bundled version of data models that are essentially monitoring different behaviors of customers with the sole purpose to help banks, financial services providers understand their customers better, service their customers better. So how we do that is we collect, if we're monitoring a small business, for example, we're looking at their point of sale data. This is the type of transactability that they're doing on a daily with every single customer, and you can extract a lot from that. We don't stop there. We also go and collect their bank transactional data because we realize that a lot of other transactions are happening there, like payments, if they're servicing a loan, if they have, other sort of bank products that they're interacting with. But we also don't stop there. We realize that in Africa, a lot of businesses, individually owned or even bigger businesses, transact on mobile money. Mobile money is basically telcos who've just given people the power to transact as well outside of banks. And so we collect that data set as well. And with those three, we're able to get a full spectrum of, or at least, let me not say full spectrum, but at least 80%, 80 to 100% of the transactability that a lot of these businesses do. And that's mostly covering a cash-heavy economy because mobile money is essentially bridging that gap. We also move past the financial data sets, and we also collect other alternative data sets such as, bizarre things like weather data and traffic data that we get from Uber.
Why?
The reason for that is with that data, alternative data set as we call it, we are able to infer economic activities in a city by looking at traffic, where people mostly go, travel to, weather changing, and how weather changes affects traffic and movement in cities. You can actually extrapolate some economic activity. And in future, we do want to obviously build a layer of market data, and whether we're pulling that from the typical market data set that we get from the POS terminals, basically being able to pinpoint those transactions on a map to say, at any given point in time, we can predict how much volume of transaction is going to happen in a specific area in a city, for example. And that's the level we want to get to.
This is when I realize I'm a total geek, because I kind of watch what you're doing and I'm thinking, oh my God, this is so exciting. You're becoming the Bloomberg for the individual company, not for the world or for business or for something arbitrage which can't be measured, but for the individual business themselves, and providing them the tracking going forward. Like, it's really fascinating how deep you can go into this to be able to
Yeah.
provide the level of insights where you can almost say to people, hey, by the way, your productivity has been down, but even though you're not necessarily going this crazy at the moment, but you could say, hey, your productivity is down, but have you noticed you've been getting up 2 hours later in the morning for the past like 3 months, and have you noticed this and this and this? So it's really, really incredible data that you're going into here. And by the so has this been easy to compile? I'm guessing the answer is no.
No. Simple answer is no. It hasn't been easy. I mean, I can explain our
I
journey,
like that
right?
answer, by the way. It's a good answer.
Nothing is easy. So, I mean, where we started from is we started with a B2C model. Back in 2018, we put out a savings app that was helping young Africans save money, right?
Yeah.
And you'd be amazed at how we coming from a savings background with a mobile app to where we are, how connected the problems are. The truth is, when we were dealing with B2C, direct customers, the problem again was data. We needed to understand these customers beyond them putting money, once or whatever times in a week into their savings. We wanted to understand the background of what they're doing with their in their bank account, how they're thinking about money. I mean, we even developed a whole concept around the psychology of money. We developed money quizzes and a whole lot of things to get to the psychology, those underlying alternative data sets about a person when they make decisions about their money. That's where we came from. And we realized, the gap for us was we needed more volumes of data in order to start connecting the dots. And for that type of volume, we needed to get that from the financial services providers. And again, for the business model to be validated, because it was really, really hard making any money from interest differential, we then decided to pivot to B2B, with the sole purpose again of repurposing this engine we're building. We actually wanted it to be a Google for financial insights of an African consumer. That was the point of us building this thing. And so ever since we pivoted back in 2019, that's been the purpose, to build a Google for financial insights of an African consumer. How did we do that? So we knew that for us Google didn't just wake up one day and know everything about everyone. They had building blocks, but they were also collecting data sets that no one was paying attention to. That's the whole point. Data that is readily available, like weather and traffic and geolocation. You can track people's movements, but no one ever thought to connect that to finance and financial behaviors and almost trying to predict going forward what that could be just based on it raining. Amazing. Right. And so we started off saying, what are some of the readily available data sets that we can get at volumes? And that's the whole point of looking at the Uber APIs and the Google Maps and all these other readily available data sets. But we also knew that we needed partners that had this data, these incumbents that have been holding on to this data for so long and not necessarily repurposing it well. So we went back and we said, let's look at the people that are, that the banks are relying on, the TransUnions, the credit bureaus that have another data set that is offering them a partial view. So let's use that as well and overlay it with so much more on it to then offer these banks a much more enriched view of their customer base. So that's what we're doing. I mean, there's many other secret sources to our products, which we can't speak of, but the point of it is we keep building a larger data set of these alternative data sets, and not just it being large, but also very, very diverse. So it's about versatility and volumes for us. So
incredible.
that's a simple answer.
And as a small business, and as many of the small businesses that I work with, this is so welcome, because we've never been worried about the fact that privacy of our data and holding on and not sharing it, because we know all of our data has been shared for years. If anything, consumers have been ignorant for so many years while our data has been passed around from one person to another person. The only thing that's been in common with all of that data transfer previously is that it never had any benefit to us. It always had benefit to other people who wanted to sell stuff to us. Well, what I love about what you're doing is you're saying, Brian, you know what? You have a business and you want to grow your business and you want to be able to have capital working for you, not the way things are right now, which is that banks will offer you money when you don't need it because suddenly they see like $50,000 go into a bank account and they said, hey, we feel we can really help. Well, why? Like, why do you feel you can really help? You know nothing about that money. You have no context of how it is in relation to the rest of my company. So this is a really, I believe timing is everything in companies. I also don't, by the way, just as a total side, I actually don't really think that companies pivot at all. I think we all evolve, right? What happens is we create incredible data or we create an incredible structure for something. And that structure is supposed to benefit consumers in a very specific way. And the greatest companies listen to their consumers. Right? Most of the companies, they think, yeah, you know what I'm going to do? I'm just going to bust through. We're going to make it happen. You know why? Because I'm a guy and I'm going to keep on fighting and pushing and things. And then there are just some really smart people out there who are like, you know what? I know this seems crazy, but why don't we just stop and listen to what our customers tell us, which is the thing that they need more than anything in the entire world. So I love that you evolved the product fit while continuing to listen to the customers to get to what I truly believe is the ultimate product fit, which is where you are right now. Was that a difficult process?
Yeah, I mean, I think it can be difficult if you resist, right? If you resist what your consumers are saying and you decide to do it your own way, you will definitely see the highway. In our case, I think it was simple because we had the willingness to basically go back and listen to our consumers. We didn't go with the ego to say, we already know what you want. We already know what products you want. And I can tell you this confidently, Brian, 2 years ago, when we had this B2C model, I would not have seen a B2B play. I would not have seen the product evolving the way it has. But because of those insights of our consumers and constantly something that a lot of our customers were saying was, oh my gosh, I so wish this was integrated in my bank. I so wish my bank knew exactly what you're about to tell me. I so wish they took the effort to understand my money habits, to help me either learn for financial literacy reasons, or even just recommending the right type of product at the right time. This is what a lot of our customers constantly said. And, and it got to a point where we're like, guys, actually, let's go back to the drawing board. Let's take these insights in and look at how we could possibly evolve and give value from where we are to these big bangs, but with the sole purpose to benefit the individuals or the end consumers. And then that's essentially what we did. And I don't think that process is hard. I think a lot of entrepreneurs just need to really open their eyes and really observe. And by observing, it means taking out your biases, whatever preconceived notions you have about, this particular product or model being the way you want it to be in your mind, and listen to what the consumers are saying, because the answers are always there.
Okay, I'm going to take a angel commercial break right now. And that means that I'm going to do a little one-on-one with all of the angels and investors listening in on this call. And I'm going to give you like 4 or 5 tips as to why this is an awesome, awesome, awesome company to invest in from our perspective. I'm not advising you, but I'm telling you why we did it. Number 1, I'm going to start with gender. Female entrepreneurs are more successful than male entrepreneurs. Full stop, nothing else. That's it. Period. Okay. And if you look at the statistics going across the board, just the conversation we just had about being able to look introspectively and get the feedback from the customers and then be able to use that to continue to build a client, that is something where females are uniquely better than males at actually doing. So the fact that you have a female here in front of you is a big plus. Number 2, the fintech space right now is one of the hottest spaces on the planet. Everybody's looking at it. And I'm not talking about blockchain or any of those types of things. They just happen to be the buzzy things that are really happening. The really interesting stuff is the actual management of money through all of the multiple different platforms, through multiple different players. It used to be real simple. There's like 4 or 5 banks. Maybe there was a couple of big players. You had your Google, you had your Apple, you had a few other folks out there as well. Now there are tens, hundreds of millions of interactions between both sides, not just like 5, 10, 15, 20 folks who are actually lending the money, transacting the money, being owed the money, but I mean tens, if not hundreds of millions of people on both sides of the playing board. Fintech is where it's at for the next 5 years. And nothing is deeper in fintech than a platform that allows all of these folks to be able to work out better who should be buying what and who should be able to get credit for what. This is how we increase the economy. Number 3, Africa. As a community, as a continent, as a place which is just on fire right now. It is I believe it's predicted to be the second fastest consumer growth market on the planet. It is also the fastest, if I'm not wrong, middle class growth market on the planet. You also have a monster consumer base, and small and medium-sized enterprise are exploding there. You have a higher percentage of small and medium-sized enterprise than you have anywhere in the world. But I'll just throw in my layer in my last piece here, which is very unusual for us to get, because those first 4, actually, honestly, 2 of those 4 would have been enough for me to invest in there. But this final one to me is incredible, and we never, ever, ever get it. And that's that exactly the same product that is being launched here in Africa is good for India, is good for Europe, and is good for the United States, because all of us are massively frustrated with the way the entire credit process works. So just look into this company deeply. Okay. And now we're back. So, hey, can you talk to us a little bit about, so we know about the product, we know about the problem, we know about the solution. Obviously, everybody knows that I believe that you're an incredible entrepreneur and that you've built a company whose time has come and is absolutely necessary in the world. So let's talk about market entry. Let's talk about what traction has happened so far, who we don't need to mention names unless you want to, but who you're starting to build relationships with, and then how we then grow that company in the future. For investors that are coming in right now, how are they going to see the revenue continue to grow, and what type of time periods are we looking at? And again, for all investors listening to this, we're talking about what we hope is going to happen. You shouldn't rely on any investor decisions on what you hear here, but they are the genuine thoughts and feelings both of myself and also of Tebogo. Okay.
Okay, sure. So one thing that we do, Brian, is we don't want to go into markets by ourselves, right? This has been proven in the past, and whether you look at it from a philosophical point of view, it's just not good to go in alone. So one of the biggest strategies for our market positioning is going in with partners. These are partners that already have the Pan-African footprint or even global footprint. As it stands, as today, we actually officiated our partnership with IBM as a tech partner company. And a commercial, very tiny, and a commercial partnership. So, you understand IBM was one of the first to come up with this AI thing, and they have built amazing tech, and that's basically the right type of partner to help us scale the product side. However, it just doesn't end there. They have a footprint, they're servicing the type of customers we want. And so from a commercial point of view, it just makes all the sense in the world. We are also unlocking a partnership with Visa and TransUnion and other tiny companies, of course, that are just so happen to be well known. So again, those are the type of partnerships that are going to accelerate our growth, allow us to enter into spaces that we never thought we could, and that we definitely won't do by ourselves. Currently, we also have a partner in Ghana called...
And sorry, just on Visa and IBM, how do you see those partnerships actually transacting? Will they refer you into some of their customers or just give you access? Because obviously IBM and Watson and all the wonderful things that they're building, they have access to just great platform knowledge that can really help you. But are they actually going to help you with sales as well? And what might that look like? I know you probably can't go too deeply into it, but give us a surface view.
With the IBM one, the commercial structure is going to look a little different. So it's not going to be them distributing our product. They don't distribute at all. However, we are basically going to use their technology to build a much bigger value proposition and much bigger sort of contribution to the value chain as we possibly can.
Incredible.
And that becomes a much easier conversation going to a client and say, look, we have IBM backing us. We know you're probably running some IBM product, and that just opens the conversation, right? And yes, they will do introductions where it makes sense. However, from a distribution partnership, it's not in the traditional sense. With
Perfect.
Visa, though, it's an incredible partnership that we're looking at here. What Visa is really, really excited about, which I was taken aback by the way, Visa being excited about our business is huge. So Visa basically said, look, we have been thinking about this model for years, and we've been looking at businesses that could help us get into the spaces where you guys would essentially be the technology partners for any lender in any shape and form. And they want to come in to be a partner to us to disperse any funds on behalf of the lenders. So think about this model where you have a non-traditional lender, a telco, wanting to lend. They have no value chain whatsoever. They haven't scored. They know the type of customers they want to lend to, but they don't know how to score them. They don't know how to onboard them. They don't know how they're going to disperse the funds. And with a click of a button, they can essentially unlock that because we would have partnered with Visa, who will then disperse the funds on behalf of the lending partner. We score, we disperse the funds all in the same value chain on a SaaS platform. And the lender themselves doesn't necessarily, they don't need to add anything else. They just are capital providers, and that's basically it. Where it gets really, really exciting is we do the scoring using whatever alternative data we have on the consumer. In this case, it could be a small business or an individual. With Visa's partnership, we would then be able to get a full loop, almost create a circular economy where we can monitor how the customer uses that money once it's dispersed. And that feeds back into our understanding and the credit scoring of that particular customer. And so in this case, we can dynamically increase the value of the capital they have access to, or decrease it if they're too high risk. But in any case, you would have predicted default, you would have minimized default, and you can dynamically almost structure what that loan would look like, and almost recommend where they can use it to either grow their businesses and so forth. So you're creating a much bigger value proposition, because with that, you can plug in so many other partners. So can you imagine banks being partners, insurance partners being partners, and you're almost creating just the circular economy for to benefit not just the lender, but any ecosystem player, because that's what it would be. It would be an ecosystem that's just based off our pipeline, essentially.
And you just
our
really
technology pipeline.
you really become the Intel chip inside the computer that is decision making on the best people to lend money to or not. And phenomenal
Precisely.
partners, and you are absolutely right. It is so hard. Stand on giants' shoulders. We're all, life is too short and it goes by too quickly, and we have to scale fast and make sure. And what I really like actually is you're doing two really important things at the same time, which are really hard to do for entrepreneurs. Like the first one is, normally we have to choose. Do we build great product and make it last for an awful long time before we scale to market and make sure it's right? Or do we scale really fast and push ourselves up? And it's a really hard decision, because if we go too fast without the right foundation, we die. And if we don't go fast enough, somebody else will take something flimsy, put a good brand around it, and we lose, not because we're not better, but because we just are Kodak and we're not. We haven't thought about what's happening in the future. What you've done is both, like your two partnerships, just those two fundamental partnerships of having that structural integrated service built into a beast of a company. I mean, there's nobody else. If you did a trivia quiz today and said, who do you think of when you think of artificial intelligence? One company. Everybody's going to say IBM, or they're going to say Watson or something like that, because they own that, right? And then if you said, I want you to talk about a money lending institution, the most important one in the world, it would be Visa. So you've taken both. And then, so how do you see, so it's brilliant. So how do you see the growth over the next year? Let's go through 2021, and then let's jump through 2022 and 2023 as well. And what type of money are you going to raise, and what growth do you expect to see based on that?
Yeah. So with these partnerships in 2021, we are looking at a 15x growth from where we came from. So essentially hit or at least go over the $1 million revenue.
For the annual recurring revenue, right?
Yes, annual recurring revenue.
Perfect.
And the year after, we obviously are looking to hit that $1 million revenue month on month. That's basically the growth. The growth goal. You know, and I think for us here, the important thing is with these type of partnerships and the right, not just the partners, but the clients we're going after will also enable us to basically get there. And let me give you an example. So we're working with, our primary focus was to go after the South African banks that we have access to at our doorstep. These banks are the same banks that are active in 10 plus markets in Africa. So you just basically need to unlock one market, the South African market, and scale with them in all the different markets. As long as you can provide them the value in each of the different markets, that's basically what we've done. So we've started looking at that, but we also looked at, for example, BNP Paribas, because they are in Francophone Africa. And that's another market that, because it's French speaking, a lot of people don't pay attention to it. So BNP Paribas has a subsidiary in South Africa. We built that relationship. We're servicing the subsidiary in South Africa. However, the goal of this project is for them to then prove the value here and expand it in all the different markets that they're present in Francophone Africa. So
Incredible.
We're looking at about 10 markets here. And so with the figures, the growth figures that we put down, that's basically our the most conservative figures, because, you know, we can't, I don't know, maybe it's something about being a female entrepreneur. We just don't want to, would rather demonstrate than talk, right? So those are the conservative growth. Yeah, and exactly.
I know it's radical. Trust me, in the world that I live in, this is a radical concept. But I have to say, I kind of really like it as an investor that we're going for. And tell me as well. So I love that you're doing, and I can see all of the partnerships that you're building. How much money are you going to raise now? And I want to finish it up because I want everybody who's listening to this to be really focused on the last couple of things that you said, which is the partnerships that you've built, the foundation that you've laid down, the revenue that's due in this year, which is $1 million annual recurring revenue, and then how you become the Intel ship, or how you are the Intel ship already, to then make sure that you can then drive that up to $1 million a month in revenue. And then obviously after that, the sky is the limit. You could go anywhere. So how much are you going to raise now? And then talk to me just very quickly, just add on to that, the raises that you're going to look for in the future. And then I want you to finish this up with your message to investors about what a partnership would look like for you.
Okay, sure. So in our pre-seed round, we are basically raising $500,000. And, you know, I think the preferred mechanism is SAFE, just because we don't want to be tangled in valuation conversations at this stage. And in future, we're looking to raise about $2 million in seed, and that'll be 12 months from now. And again, that's
maybe even sooner.
Maybe even sooner. Who knows? Yeah. We already gotten so much interest from the pre-seed round. It's arguably oversubscribed, possibly, but we're still waiting for competitive term sheets. But in future, it's going to be the seed round, which
save a few dollars. We're going to get, so in other words, here's the big message to investors. You have to have strategic value of some type. You got to bring something to the table.
Absolutely.
This is not about money. Nobody here needs money.
No.
This is a company which is already about to go through the roof. You have to be able to add to the pie.
Yeah, there has to be more than just the money. You hit it on the nail there. And that's essentially why we went with Expert Dojo. We love that, you know, there's expertise in growth. We're going to learn so much. And the business is at that point where it is going to grow, and we're going to need that type of support. We're going to need those strategists that are going to help us on the way. And so we are looking for those type of investors that are going to bring more than just the money, open a pipeline, help us scale, find these partnerships, find these businesses that are hopefully going to acquire us at $1 billion valuation, because we are going to be a unicorn. And so that's essentially my message to
I don't think you're going to want to be acquired. I honestly don't believe you're
IPO.
going to want to be acquired. I believe you're going to IPO. You know how many females in the US have IPO'd? Ever?
No, I have no idea.
So from founding a company to IPOing a company.
I have no idea.
Have a guess.
How many? 10?
3.
No.
Isn't that awful?
That is horrible.
Horrible,
I
right?
even thought 10 was such a small number.
Yeah, so it is a tiny number, right? And I don't even want
That's
to tell
horrible.
you how many African CEOs, and like you don't even want to go down that road. So I'm just saying,
No.
like you actually have a time. I truly believe. I think if you did a $1 billion acquisition, I wouldn't be disappointed for the money. I'd be disappointed for you. Like for me, it'd be fine. We'd be great. We'd be very happy actually. I'd be kissing your feet. But no, I'd be disappointed for you because I believe you
Yeah.
have the ability to build the next Stripe for credit in what you're doing here. I believe you
No,
can build
absolutely.
a 20, 30, $40 billion company and you can easily IPO on your own level. So
No,
look,
I agree that I agree with that.
I just want to finish it by saying, look, I am absolutely privileged to be on this journey with you. I am so stoked that we've got you in the cohort. We're gonna blow this thing up. It's going to be incredible. What you need, what you're bringing to the world, is absolutely needed, and it's our duty to help make sure that we get you there. And for all investors listening outside, you got to be thinking the way I'm thinking. This is a big one. So, how can everybody contact you if for anybody who wants to reach out?
So I'm available and active on LinkedIn. I think that's probably the best way to contact me. And on LinkedIn, we can obviously share email addresses and chat from there.
Perfect. And then obviously anybody can just shoot an email over to me at Brian at Expert Dojo anytime, and I'll make sure that I introduce everybody on the call there. So just remember, in summary, we're looking for investors that bring something special to the table, either in banking or in fintech or on some level that's going to bring it up. This is what we want to be. Number four, the fourth female CEO to bring a company from foundation all the way through to IPO. And I want to be there right beside you when you're ringing that bell. So look, congratulations on everything you've built. You are epic. We have the cohort starting next week, so it's going to get better and better and better. And I'm looking forward to it all.
Thank you. Thank you so much, Brian, and everyone. Yeah.
You got it. And that's a wrap.